to the different types of investing. And we're going to be talking about things like day trading, swing trading, long-term investing, etc. All right, so day trading. This is another one that you see a lot, very, very popular. You got these red and green graphs and lines right behind them, and they're smiling, telling you how much they made that day. And a lot of day traders have lots of computer screens like you see in the top right. And day trading is technically where you buy and sell a stock within a single day. So an example of this is you might start your account out with $10,000 at the beginning of the day, and you have $0 in stocks. Throughout the day, you might put all 10,000 of those dollars into a particular stock. But by the end of the day, you sell all of that stock. And whatever you have left is whatever you ended up making. So if you had $11,000 at the end of the day, then you would be up 10%. You made $1,000. However, if you have $9,000 at the end of the day, that means that you lost money. And some of these trades don't last long at all. You might buy and sell within a few seconds. Other trades might last for hours. Now, there's a ton of different types of day trading. You've got like penny stocks, you've got Forex, and news makes trading fluctuate quite a bit. So one single news article from a certain outlet could make a stock go up a lot or down a lot. Now, this is very, very risky. Day trading is super risky. And I want you to know this is just a straight up fact. I'm not hating on like day trading channels, but most day traders lose money. It's not that they break even. It's not that they make less money than you would if you did long-term investing. They straight up lose money. And that is just a fact. So this is something that I have no doubt if you get incredibly good at it, you can make money consistently from. However, most people are not good at it. In order to become good at it, you'll probably have to lose a lot of money because it takes a lot of time and experience in order to get good at it. Swing trading is similar to day trading, but instead of buying and selling within a single day, in swing trading, it could be a few days or a few weeks, maybe even up to a month. So you are buying a stock with intentions of selling it soon, but you might wait a few days or a few weeks. So for instance, you might have an inclination that a company did really well and they're about to come out with their Q1 or Q2 earnings, or maybe they have a huge announcement that they're about to make that is going to send the stock price soaring. You don't know exactly when that announcement is going to be though. So what you would do is you would maybe buy some of the stock and then wait for the announcement to happen. Once that announcement happens, the stock does end up going up maybe 5 or 10%, something like that. That is when you would sell the stock. Now, one big problem you have here is overnight risk. So you might go to sleep and the price of a stock is, let's just say $100. And when you wake up the next morning, it's only 90. That's not something you'd have to worry about with day trading because you always close your position at the end of the day. Now, swing trading is not as influenced by the news, but it still can be. And in order to be profitable, it does require larger price movements than something like day trading. Now, it's probably not as risky as day trading, but it's still pretty risky. Long-term investing. This is my favorite personal type of investing for many different reasons. And long-term investing is exactly what it sounds like. You are making an investment with the intention of holding that investment for a very long time. Now, generally speaking, long-term investing, you're going to be investing in intervals over a period of time. So for instance, you might decide to invest $500 a month every single month. Long-term investing is not nearly as risky because as we've talked about before, the market does go up and down, but generally speaking, over the long term, it goes up. It's also relatively hands-off because you're not constantly having to check the stock price. It's pretty easy to automate. Pretty much any investment brokerage has the option for you to long-term invest. So for instance, like I said before, you can set it to where it takes $500 every single month out of your bank account and automatically invest it into whatever stock you want. And on average, long-term investing gets better returns than both short-term investing or trading. There also tends to be a lot less in fees because of the fact that you're not constantly buying and selling and moving your money around. And if that wasn't enough, there are lots of tax benefits to investing for the long term. So we're going to go over this later, but basically you pay a lot less in taxes if you invest for more than a year than if you invest for less than a year. This is called long-term capital gains tax versus short-term capital gains. Another really great type of investment that everybody should take advantage of if they can, however, it is somewhat limited, would be retirement accounts or tax advantage accounts. So some examples here would be the Roth IRA. This is the individual retirement account. Now these accounts are all, of course, based in the US. Other countries will have similar versions, but the Roth IRA, for instance, you can invest in about $6,000 a year, and it has some incredible tax benefits. The money that you put into your Roth IRA gets to compound completely tax-free. That means you don't have to pay money on the compounded interest within the Roth IRA. So you get the magic of compound interest without even having to pay taxes on it. Now there's a lot more to these. I'm going over them super fast, but the 401k is really great as well because a lot of the time your company will match the amount of money you put into your 401k. So many companies, for instance, if you do 5% of your paycheck into your 401k, they will match it. So just as an example, let's say you're putting $1,000 a month into your 401k, the company will match that $1,000. And so the total amount that goes in there is $2,000. And then the 401k also has some tax benefits as well. Another example is a health savings account. That one can be really good too. It's not as common as the other two. And that one, of course, is meant to help with healthcare costs, but there's other ways you can save money with it as well, and more. There's a lot more options out there than just that. Those are just some common ones. And these tax incentives and tax advantages are just absolutely ridiculous, and you'd be crazy not to take advantage of them. However, there's usually pay early withdrawal penalties, right? So this means that the investments are less liquid. So these are designed to be accounts where you don't withdraw it until it's time for you to retire. But if you do decide to withdraw early, there are some really nasty benefits, and that would kind of defeat the entire purpose of having all of these tax benefits. So you definitely want to take advantage of your retirement accounts if you can. Another type of trading is leveraged trading. And this is basically where you take borrowed money, usually from whatever exchange you're using, and that increases the potential gain of a stock, but it also increases the potential loss. So let me give you an example of this. Let's say that you have $100 and there is a $100 stock that you believe is going to be going to $200 really quick, like maybe tomorrow. And you have very strong conviction in this belief. What you can do is you can trade on margin and borrow $200, so your total investment is $300. Then the next day, the stock goes up to $200 per share, hopefully, and you sell it for $600. Then you pay back the $200 and you pocket the $300 in profit. So this is a very simplified example, of course, but leverage trading is something you can do as well. Of course, it's very risky because if the stock price goes down, you